Hello everyone, welcome to yet another weekly analysis. So first and foremost, for a couple of weeks we have not been able to get entries or rather trading opportunities on the dollar. But after a while, from March I think the dollar started to give us entry opportunities. But it's been what, like 2 months since we traded the dollar, so we haven't really been able to make videos on this channel. But we're back right now, so because the greenback, which is the dollar, is looking good. So first and foremost, let's look at the dollar index, because obviously this is the dollar itself. But we use the Euro USD, UPSD as proxies to trade the dollar, right? As proxies to trade the dollar. So the dollar is looking bullish again. First and foremost, it is bullish on the monthly time frame, but because we are underneath these areas of interest, which pushes the market to the downside, we are looking for sales. But now it is bullish again. Now this is what's gonna happen, right? I've said this before, right? Whenever you see a double bottom like so, right, like so, and then it then goes to break the neckline like so. This is the neckline right here. This right here is the neckline. It then breaks the neckline. It is a confirmation that the reversal is complete and we should start taking actions. And that's the exact same thing we're seeing here. We successfully closed above the neckline on the monthly time frame. Now, in as much as we're underneath this level, we anticipate that we're going to break through it and keep on pushing to the upside. Now, on the weekly time frame, we need to be able to look and see, all right, are we going to be able to trade in that direction? Are we bullish or not? So, on the weekly time frame, we have successfully also broken structure, and I was expecting for us to reject off of this level with this double top. But I then also said to myself, if we get a trading opportunity or a break of penalty trend line of some sort, from this level, instead of falling down like and breaking the neckline like we did in the past right here, then we'll be looking to push to the upside. So in this case, the market came here and then there was a bullish engulfing. But if you look at the left hand side after the double top, right, it came here, but it didn't give us any bullish engulfing. So these are signs, right? These are signs that, all right, we may just be having the push that we've been anticipating. Excuse me. Now that we know, for example, for a fact that the dollar should be going north, we are bullish. We need to go to the Euro USD to then look for entry opportunities. Now, there's something I'm going to also show you on the Euro USD, right? On the weekly time frame. Now, this is what I said. On the weekly time frame, we haven't formed any first consolidation, so we couldn't copy any consolidation. I expect it to happen in the next consolidation. Now, but this is what I'm going to show you, right? After this weekly time frame pullback, or rather, whilst it was pulling back, it hits the area of interest, right? Now, in the previous videos, we've said whenever you get to an area of interest, you don't just sell automatically. You need to see signs of a reversal. You need to see, candlestick patterns, or candlesticks, that tell you, all right, it's about to go down. We're about to reverse. Meaning, I need to see a small body candle, a reversal candle, like a falling, a reversal candle like a hanging man. This is a hanging man right here. You get all of these from candlestick Bible, right? A hanging man right here, and this indicates a push to the upside, or rather a reversal. So in this case, we've gotten to our area of interest. Not only we've got to the area of interest, we've had a small body candle. This is basically a doji pointing to the downside. Now, whenever you've got to an area of interest, and then you get a small body candle like this, a doji, anticipate that it is going to bring a bearish engulfing. So anticipate that next week we will get a bearish engulfing. Now, all of these things are conjecture, like I've been saying, anticipate, but we are able to anticipate and predict based off of data. We're not just guessing. We're not, no, this is no guesswork. We are able to anticipate off of data that is being provided by the markets, right? So for my execution on the Euro USD, right, I need to see it's quite tricky, but I'm going to show what I'm looking for now. This is exactly what I said. When we've got into the area of interest, I need to see a confirmation candle to tell us, all right, I'm about to go to the direction that you've been anticipating. In this case, we got to bearish engulfing, and that's perfect. In this case, we got there and we had another hanging man like so, and then a bearish engulfing followed. These are the things that help us to prevent early entries, unnecessary losses. Because trust me, nothing sets you back than unnecessary losses, early entries. you take a loss or two, that is going to be detrimental to your account. Trust me, it's going to be, it is going to show, when you take a loss or two, it's going to, hold you back, especially if you're a swing trader. Especially if you're a position trader, you don't get a lot of opportunities. Last month we took two trades, CAD JPY and GP JPY. That's all. So imagine if in a month, the best you could do is one or two trades in a month. You don't have room for error. You have zero room for error. So, as time goes on, as you learn from your mistakes, you begin to, cut those errors down. You begin to, learn from your lessons. You begin to learn from your losses, and then you cut those errors down. That's what we are on here to do. And basically, instead of me looking to make profit, I look for ways to cut the errors down. I look for ways to cut the unnecessary losses down. So I have, entry boxes that I have to tick, like a break of structure, right? Break of counter trend line. I need to see a reversal candle on the time frame that I'm having the pullback, right? You see what I'm saying to you? And that's it, right? And I basically have like four boxes I have to tick on my journal. Now this is what I was anticipating. Now I needed to see a break of counter trend line like so, right? A break of counter trend line which we have, but I also need to see a break of structure. Yes, I need to see a break of structure. Now, I do not know about other people, but I know about myself, and I know about, the lessons I've learned. I need to see a break of structure, meaning we have to create a lower low here, but on the 4 hour time frame, it's quite far. It's basically impossible, right? Because we have to execute. Now, that is where we come to the 1 hour time frame. We don't go lower than the 1 hour time frame. We never go lower than the one hour time frame. Now this is what's gonna happen, right? On the 1 hour time frame where we are able to, break the structure right here, create a lower low, and then anticipate, set a limit around this area to give us at least a 2 to 1, right? A 2 to 1, and then we're done. And my stop losses, or rather our stop losses, are supposed to be above 4 hour structure points right here. I don't put my stop losses above 1 hour structure points, no, because the 4 hour is always going to, defile the 1 hour. You can see that I drew my pattern trend line on the 4 hour, not the 1 hour, right? Because the higher the time frame, the higher the trend line, the higher the structure point, the stronger the stop loss area, right? That These are the things, these are the lessons I have learned off of mistakes. It's fine to have a mentor, but I very, very implore you, to learn from your lessons. There is no better teacher than your failures. Trust me, your mentors, they learn off of their failures. You have to, especially in trading, you have to know what works for you. You have to know what works best. The things that work best for me may not be the things that work best for my mentor. It's something to you, because I've been able to, learn from the lessons I've made, something from losses I've made, and then I'm able to, journal them, test them over time. It's something to you. Counter trend line, from at the body or at the week, stop loss placement. These things mature over time. Over a year, I'm able to say, okay, I've tested this, particular, stop loss placement. I've tested this particular entry strategy, and over time, it has shown me that it works. Not over a trade, or over a series of trades, or over, a month. No, over a couple of months, over a quarter, 2 quarters, of even over a year. And that's what it's about. That's what trading is about. Or trying to master a skill is about. You have to be willing to to try and error over a long period of time. Not come on here trying to make money, and you go to the 1 minute time frame and say, oh, we've made money. No, you've not made nothing. It's something to you. Be able to, go to the highest time frame. We started from the monthly time frame, and now we are at the 1 hour time frame. Every time frame has its purpose. Now on the 1 hour time frame, like I've just said, this is my entry. This is going to be my entry strategy. I need to see a break of, 1 hour structure, because yes, it's very important for me to break structure, because over time, right, in the past I've seen counter trend line break, but in time of trying to break the structure, it defiles it and then goes the opposite direction. So I've been able to save myself, like I said from the beginning of this video, unnecessary losses. Unnecessary losses, right? Early entries, these things set you back. And we do not have time to make to try to, learn from these mistakes, because time is not even on our side, even as human beings. We want to learn quick, we want to resolve issues quick, we want to adapt quickly. There's no time to say, oh, let me just try it again. No, you've made your mistakes, you've learned your lesson, you move forward. Don't remain stagnant and try and say, oh, try to keep pushing. Oh, it's gonna work. No, 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 no. If you keep doing the exact same thing every time, it is foolishness. That's what Albert Einstein said. You can't keep on trying to, because that's the same thing I said to myself. How can I keep on looking for change of a different result, and I'm still entering off of just structure points, or I'm still putting my stop losses at a very very stupid area like above the 1 hour structure. No, before I it's gonna take it out. The daily time frame is gonna take it out. So you wanna go above and beyond with your entry strategies, your exit strategies. Now, this is what I'm going to say right now, because I've been talking about entries and nothing about exits. Now, for exits, because in your journals, because most people don't journal, I've been journaling for my first year. The only thing I have constant with me right now is my journaling. From my first year till now, right? The only thing I've been that I have kept over time, that hasn't changed, that hasn't been modified, is my journaling. I have been journaling since the beginning, and even my journaling changed. From the beginning, I would take 2 trades a day. Now I take 2 trades a month. You see what I'm saying to you? From the beginning, I would plan to trade 3 to 4 pairs in a week. I'll plan 3 to 4 pairs in a week. Now I plan just 1 pair in a week, or in the course of a month, I'm looking to trade just 1 pair and ride one particular trend. You see what I'm saying to you? These things, they show themselves over time. Not come on here trying to make money in 6 months. Not come on here trying to, even you don't get, even those who work 9 to 5, 9 to 5 hours, they don't get paid, until after 2 weeks or until after the end of the month. You don't go to your boss and say, I need my payment for the day. Give me my hourly rate for the day. You're gonna get fired. So the same thing also. How you gonna come on here and try to make money the same day? It's insane. Anyway, for our exit, this 100% right here, or rather this area that caused the push on the daily time frame, that is our exit. Like so, this is our exit, meaning this is our first take profit. So it is a 2 to 1. When we get there, we get out. The same thing to you, or we take majority. Compound interest. This is what it's about. Compound interest. I'm not looking for 7 to 1. If it presents itself, fine. But my stop losses do not change. My stop losses are constant. My stop losses, they don't change. They are the way they are. They are going to be where they are. They do not change because I'm trying to look for higher returns. No, no, no. So it is very important to understand that trying to look for 7 to 1s, 5 to 1s, 10 to 1s. It is possible, but it is also important for you to take what the market gives you. Now, this is my first take profit, and around this area right here, this is my last take profit, and this is going to be the next area for execution on the Euro USD. Now, it's also very important to understand the use of chart patterns, like so chart patterns like in the double tops, heads and shoulders, and the likes of them, right? So it's very important now, because I've been able to train my eyes. I've seen, all right, this is a double top right here, and I noticed a neckline right here. So this is a neckline right here. So when I get out of this first trade at this take profit area right here, I'm going to be expecting a retest of this neckline, right, for my second entry, and a sell to the downside. So in the space of how many pips, in the space of I don't really count pips, I don't really care about pips, but for the sake of the video, in the sake of 200 pips, I've been able to execute twice. I've been able to execute the first trade off of structure points, and I've been able to execute the next trade off of the neckline. So you can see how much I'm able to catch these intricate entries and exits areas, just off of sticking to a particular trend. Trust me, you are better off riding a trend or two, not three, not four, not five, not six, not 7 pairs. No, stick to that 1 pair. Stick to that one currency pair or whatnot. Like for example, I'm trading the dollar and I use the euro USD and GBP USD to trade the dollar. Just stick to it. Because trust me, when you do that, you're going to be able to see the little things you may not see when you're focusing on the other pairs. All your energy is going to be focused on the euro USD. All your energy is going to be focused on the GBP USD. You're going to be able to see the things you would not normally see, because why? You are easily distracted with GBP USD, AUD USD, gold, silver, this. So relax. Something to relax, right? It is also it is also to go against human nature, to say, I'm going to wait, I'm going to sit on my hand. It is very hard, but in time, with training, it becomes easy. I'm telling you, when you've seen that you make more money when you sit on your hands, trust me, you're going to sit on your hands. You're going to fight against the urge to push the buttons, to push the buys, to push the sell, to look for a trade, to go and pursue the market. Trust me, nothing will teach you more than your failures. So this is going to be the end of this video, and I hope and I pray that everyone follows their trading plan. There's nothing more to it. I'm telling you, there's no strategy that has not been traded under the sun since the beginning of trading. Since since the 1800s, the candlesticks and whatnot, the Japanese candlesticks and whatnot. Since the beginning, there is no strategy that has not been traded, right? So the only thing that we have against the market are our trading plan. Follow your trading plan. I urge you, follow your trading plan. That's all you have. Not someone else's trading plan. Your trading plan, not your mentor's trading plan. Formulate yours. That's who you are. So have a great week. Ciao, ciao.